Good morning, this is Tim McGowan for the Finance News Network. Stocks plummeted and US government bond yields soared on Tuesday as fresh data undermined investors' bets on the persistence of inflation and how much the Fed Reserve will need to raise interest rates to combat it. After cutting out food and fuel, consumer prices climbed by 6.3% in the year through last month, up from 5.9% in July and more than 6.1% economists had projected. Economists surveyed by Dow Jones had been expecting a decline of 0.1% for overall inflation, with a rise of 0.3% for core inflation the outcome. Compounding the bad news, two products that have been major drivers of inflation over the past year, that being gas and used cars, are now posting outright price cuts. But other goods and services are picking up in price so much that it is more than offsetting those declines, with rapidly rising costs for rent, healthcare, restaurant meals and goods such as furniture offsetting the relief consumers were feeling at the fuel pump. Following Tuesday's surprising data, expectations are shifting again. Some investors are even starting to price in the possibility that the central bank could lift interest rates by a full percentage point, increasing borrowing costs by the most since 1984. Amongst them is Japanese bank Nomura, which in the past week has shifted from predicting the Fed would lift rates by half a percentage point to 0.75% to a full 1 point on Tuesday. The yield on the two-year Treasury, the part of the curve most sensitive to Fed policy, soared more than 17 basis points to 3.748%. The yield climbed to 3.794% at one point, its highest level since November 2007. Overnight, markets plunged, with the Dow Jones Industrial Average falling 3.94%, the S&P 500 dropped 4.3% and the Nasdaq sank over 5%. The news came after 4 straight positive sessions for US stocks, which were bolstered in part by the belief of many that inflation had already peaked. We are only really back to where we were last week, a case of up by the stairs, down by the elevator. Every sector in the S&P 500 index fell on Tuesday as investors reconsidered how much the Fed may need to raise interest rates, which make borrowing more expensive for consumers and companies. Tech stocks were hit particularly hard, with Facebook parent Meta skidding 9.4% and chip giant Nvidia shedding 9.5%. Just 5 stocks in the S&P 500 finished in positive territory. Twitter was up as shareholders approved the $44 billion offer from Elon Musk. It means that Twitter will now try to force Elon Musk to buy the company in the courts. Other outperformers included insurance, lithium and fertiliser stocks. On the currency front, the US dollar was up over 1% against the euro, yen and sterling after the US dollar index was down in 5 of the last 6 sessions. One Australian dollar fell almost 1.5 cents overnight, buying 67.31 cents. The price of Bitcoin was also battered, dropping 7.34%. The crypto is now down almost 42% for the past 6 months. On the commodity front, iron ore futures are pointing to a 1% fall. Gold lost 1.3%. Silver was down almost 2%. Copper dropped 1.5% and the oil price fell 0.5%. On the futures front, the ASX is expected to fall heavily today following US stocks. The SPI futures are pointing to a 2.3% fall. This is Tim McGowan for the Finance News Network. Have a good day.